Hello everybody, my name is Christian Charlo. Welcome to this market report. Today we're Thursday, August 7, 2014. Today folks, I want to make a follow-up on the last market report when we talked about the energy sector that was lagging. Today the energy sector continues to maintain its decrease. The stocks I've shown you last week that were actually breaking down, on most of them they have pursued their decline. So on some of them you have some opportunities to continue to hold on to them because they have not reached the 5%, but on some of them you're able to actually take some profit. So let's take a look, let's make a follow-up on those stocks, on this market report, but also let's take a look at the new opportunities that might arise if ever actually the decrease continues on the energy sector. If we take a look at the sector in the US though, when I talked about this chronicle on July 31st, we were around this area. We were just starting the breakdown. I told you we could actually reach a target of 95. We actually reached it. Now we're stabilizing. However, we're putting a lot of pressure on the support on the energy sector on the US. So if ever we have a new bearish cycle, we go lower than 95 though, then we might actually have additional breakdown on the sector. For those of you who are not comfortable in shorting the sector, shorting the stocks in the sector, well, I recommended that ETF, ERY on New York. Since July 31st, that ETF rose pretty nicely. Now it's at 15 bucks. So I think you can continue to hold on to it because with the pressure that we're putting on the support, if ever we start a bearish cycle on a new breakout higher than 15 bucks, I think ERY will be a great opportunity to take some profit for those of you who got in on July 31st. Now, concerning the opportunities I've shown you last week in terms of the stocks to short, there was Crown Performance that was breaking down on July 31st. It's still a hold. Now the stock is stabilizing. I think it's good. The fact that it's stabilizing on a new low, it will be a new opportunity to short. And Niska Gas Storage, since July 31st, that stock took more than 5%. So that is and also is breaking down again today. So this one is a perfect example of a stock where you have to take some profit. So Niska Gas Storage, it's a clear profit-taking opportunity. On the energy sector on the Canadian side, on July 31st, we were starting a clear breakdown. However, right now we are pursuing this decline, but compared to the energy sector in the US, where we actually have a clear sideways formation and where if ever we break that support, we might have additional breakdowns, on the Canadian side, there might be less opportunities to short because if we take a look at the situation though, since July 31st, the sector has just continued to decline. It has not stabilized enough as the US energy sector did. So there are not going to be a lot of new opportunities to short, but if we take a look at the short opportunity I've shown you on July 31st, I think there's one stock here that you have to put on your watch list to potentially take some profit, and that stock is Legacy Oil and Gas. Actually on marketgurus.tv that you can have access for free for 10 days just by clicking at the link below. We actually did recommend Legacy Oil and Gas among our analyst choice portfolio. We're still holding on to it because we have not reached the 5% required before recommending to take some profit, but so far that stock is still in our analyst choice portfolio on marketgurus.tv. There was also Western Energy Service that broke down on July 31st. Western Energy had a target until what? Until 9 at 57. So far, I think it's still a hold on that position as long as it stays below 1148. There's always and now today, in terms of the new opportunities to short, there's one in the US that's pretty interesting. It's Cenovus Energy. Cenovus Energy is clearly breaking down today. You have to put your buyback order around 31.25, and you have a target until 28.43 for a first stop on Cenovus Energy. There's also Canadian Natural Resources, but this is what I like with Canadian Natural Resources. If I put a Fibonacci retracement from that low to that top, you see here today the stock is clearly breaking down. However, if we take a look at the Fibonacci retracement, we're just reaching the 23.6% Fibonacci retracement. So at this point here, we might actually have a pause. But if the energy sector is continuing its decline on the Canadian side though, Canadian Natural Resources could easily reach the 38.2% Fibonacci retracement around 40.45. So there might be some potential there. The good thing though is that it's only losing 2.68%, so your buyback order will not be too far away, and there's some potential to reach until 40 bucks. So I think if you're shorting Canadian Natural Resources, go in gradually, make sure you put your buyback order around 46, and 40 will be actually the target on that stock to actually take some profit, close the positions, and put the money in your pocket. So as I said, if we make a follow-up here in the Chronicle Only Niska Gas Storage represents an opportunity to take some profit since last week. Elsewhere, legacy oil and gas has to be watched for an eventual profit-taking opportunity. And today, the best opportunities to short is Cenovus Energy and Canadian Natural Resources. Those two stocks are actually breaking down today. And there might be additional stocks that might break down if ever the energy sector on the US starts a clear bearish cycle. So this was Christian Charlo for your market report. See you next week for your market report.